Hey everyone, and welcome back. We're diving into a story that has the business world buzzing today.
It's a wild one.
It really is. ServiceTitan's IPO.
Yeah.
And it's got twists and turns galore, so we're going to break it all down for you.
Yeah, a lot of unconventional things happening here, so that's what perked my interest.
Absolutely. Well, let's unpack it. ServiceTitan, for anyone who's, maybe not familiar.
Right.
They're a cloud-based software company. They cater to the home services industry, so think your plumbers,
Got it.
your electricians, your HVAC companies,
Yeah.
and they're planning on going public.
IPO.
Right. Which is exciting, but then it gets kind of strange. Like they're going to use a big chunk of the money they raise to buy back their own stock,
Yeah.
which is not the typical IPO playbook, right?
No, definitely not. I mean, typically companies use that cash infusion to expand the business, develop new products, potentially even acquire other companies.
Right.
But buying back stock, particularly preferred stock with these high dividend payouts, that's a head scratcher.
It is. So what's the deal? Why go public just to turn around and buy back your own stock? It's like throwing a party and then paying everybody to leave.
Yeah, well, VC Alex Clayton, who, he's kind of a guru when it comes to IPO analysis.
Okay.
He has a theory, and he believes that buying back that preferred stock is a strategic play by ServiceTitan to simplify their ownership structure.
Oh, I see.
So basically, cleaning house before the guests arrive.
Okay.
The cleaner structure can be more appealing to potential investors.
Gotcha. So streamlining.
Exactly.
But wait, there's more?
Oh, yeah.
Another twist? This compounding IPO ratchet structure?
Oh, yeah.
What in the world is that?
Yeah, so that's where it gets really interesting. It's an agreement from their Series H funding round, and it basically puts ServiceTitan on the clock. If their IPO price is lower than what those Series H investors paid, which was a hefty $84.57 a share, ServiceTitan has to compensate them and to add even more pressure.
Okay.
For every quarter, the IPO is delayed after May 22nd of this year.
Oh, no.
They owe them even more money.
So like a ticking time bomb.
Yeah.
They're under immense pressure to go public and at a high price.
Exactly. That brings us to another curious element, and that's the price range that they've set for the IPO, $52 to $57 per share.
Right.
Clayton believes that might be lower than what they're actually aiming for.
Oh.
He thinks that the bankers could be playing a little game to generate what's called an IPO pop.
Okay, hold on. IPO top. You gotta break that down for us non-finance folks.
Sure thing. So an IPO pop is that exciting moment when a stock's price jumps up right after it goes public. It creates buzz, attracts more investors, and it can be a win for both the company and the bankers involved.
Okay.
Yeah, everybody wins, High fives all around.
So it's all about creating that frenzy.
Yeah.
Okay, but how does that tie into the price range potentially being lower?
Right. So by setting a lower initial range, they're essentially building in the expectation of a pop. It's a clever way to manage expectations and hopefully end up with a price closer to what they're truly aiming for.
I see.
Which, according to Clayton, could be in the high $60, maybe even the low $70.
Wow.
Which would help them cover those preferred stock buybacks and, maybe even have some cash left over to actually use for growth.
Okay, so I'm starting to see the bigger picture here.
Yeah.
But wait, there's more. There's this direct share program, right?
Right, can't forget about that. ServiceTitan plans to set aside 5% of its shares for this program that lets certain individuals buy stock directly from the company before the IPO.
Okay.
Now, that in itself isn't unusual,
Right.
but it's who they're including that's raising some eyebrows.
Oh, who are they letting into this exclusive club?
Well, not just your typical friends and family of the founders, but they're also offering shares to C-suite executives from their customer base.
What?
Yeah.
Hold on. Isn't that a conflict of interest?
Yeah.
I mean, if you're a customer and you own stock in the company that you're buying from, I mean, doesn't that kind of,
It definitely.
blur the lines a bit?
It does.
I mean, wouldn't you be more likely to stick with their product even if there were better options?
That's the concern. It does blur the lines a bit, and it raises questions about whether everyone's playing on a level playing field.
Right.
Some might argue it goes against the whole idea of an IPO creating a fair and transparent market.
Yeah.
But on the other hand, we are seeing this kind of customer engagement popping up more and more in IPOs. Remember when Reddit went public and offered shares to their moderators?
Yeah, that was a big deal.
Yeah, so
So maybe ServiceTitan is just riding that wave. They're trying to build loyalty, create that sense of, shared success.
Yeah.
But it definitely adds another layer of complexity to this already very intricate situation.
It does, and it makes you wonder, is ServiceTitan a company on the brink, resorting to desperate measures in a tough market? Or are they master strategists just playing this brilliant game of financial chess?
Yeah, it's a question we'll need to explore further, and that's precisely what we're going to do.
Let's do it. It's really a head-scratcher, isn't it? This whole
Yeah.
thing. ServiceTitan IPO, it's like a financial puzzle box.
Yeah.
And it just gets me thinking, I mean, are they like a totally unique case?
Right.
Or is this the new, like, the new face of going public?
Right. Are we witnessing the birth of a trend here? It's not like, I mean, they're not revolutionizing some hot new tech sector or anything.
True, true. They're serving a very solid market.
Right.
You know, like home services, the essential stuff that we all need.
Right.
But yeah, it's not exactly
Not typically setting the stock market on fire.
yeah, not typically.
So, but they are, I mean, they're on an upward trajectory.
They are,
It's
yeah.
not like they're,
Maybe not at warp speed,
not at warp speed. Yeah.
but they are growing.
Right. Right.
And their losses are shrinking.
Okay.
In their last fiscal year, they reported a loss of $183 million from operations,
Okay.
which, is still a pretty hefty sum,
Sure.
but it's a step in the right direction for sure
Yeah.
compared to past years.
Okay.
And once you factor in things like, interest and other costs, their net loss comes out to $195 million.
Okay. So not quite in the black yet, but
Not quite.
they're getting there.
They are.
Do those numbers justify these complex financial maneuvers? I mean, are they just trying to razzle-dazzle investors with some fancy footwork?
Well, that's the million-dollar question, isn't it?
It is.
I mean, some analysts are giving them the benefit of the doubt,
Right.
saying, these moves are necessary to attract investors and market that's, let's face it,
Right.
it's been a little bit skittish lately.
It has.
But then, of course, you have the skeptics who are wondering, is ServiceTitan prioritizing those short-term gains
Yeah.
over building something sustainable for the long haul?
Yeah. Yeah. And what about the investors? I mean, will they see these unusual strategies as a red flag?
Yeah.
Like, oh, they're playing a little fast and loose with the rules? Or will they be impressed by this bold, outside-the-box thinking?
I mean, it's a gamble. There's no doubt about that.
Right.
But one thing's for sure, ServiceTitan is not afraid to take risks.
No, they're not.
Whether that pays off, well, we'll just have to wait and see.
Yeah, so let's zoom out a bit, look at the bigger picture here.
Okay.
What is this whole ServiceTitan saga?
Right.
Tell us about the state of the tech IPO market in general.
Yeah.
I mean, is this a sign that the market is thawing out after this, long, long winter we've been through?
I mean, it's tempting to see it that way, especially after, the recent drought of, big name tech IPOs.
Right.
But I would probably caution against, popping the champagne corks just yet. I think ServiceTitan might be more of an outlier than a trendsetter.
Gotcha.
Their unconventional approach could be more about their specific circumstances
Right.
than a sign of like a broader market shift.
So we're not quite ready to declare, like, a tech IPO renaissance.
Not quite, but it's definitely a pulse,
Okay.
a glimmer of hope.
Okay.
It'll be fascinating to see if other companies, especially those, in those less than flashy sectors,
Right.
take a page from ServiceTitan's playbook.
Yeah.
Both in terms of like the markets they target and the financial strategies they use.
Yeah, I mean, one thing's for sure. ServiceTitan has definitely got people talking.
Oh, yeah.
Love it or hate it, you got to admire their willingness to shake things up.
Absolutely. They're not afraid to challenge that status quo, and that's always refreshing. It injects a bit of excitement into what can often be a very predictable world.
All right, as we wrap up this part of our deep dive into this very curious case of ServiceTitan's IPO, what are some of the key takeaways? What's the big so what here?
Well, I think the biggest takeaway is that the IPO landscape is changing.
Oh.
Companies are getting more creative, more strategic in how they approach going public.
Right.
We're seeing a wider range of motives, a wider range of methods at play.
So it's not just about raising money.
Right.
It's about...
It's about positioning yourself for success in the long run,
Okay.
setting the right expectations for investors, and frankly, just surviving in a financial environment that's more complex than ever.
Yeah, it really is.
And ServiceTitan is a prime example of that.
It is.
Whether their gamble pays off, well, that remains to be seen.
Right.
But they are a case study worth watching, that's for sure.
Agreed. And they're raising some, big questions about the future of IPOs. I mean, will we see more companies adopting these unconventional tactics? Will investors, embrace this new era of creativity? Or are they going to long for those good old days of predictability? I mean, only time will tell.
Indeed. But one thing is certain, the IPO world is anything BUT boring these days.
And that's why we love a good deep dive.
That's right.
Because, sometimes the most interesting stories are the ones that challenge our assumptions and really make us rethink the rules of the game.
Well said. And on that note, I do have one final thought I want to leave our listeners with.
Oh, okay, I'm all ears. What's on your mind?
Well, I think we've spent a lot of time dissecting the financial nuts and bolts of this IPO.
Right.
But let's not forget about the human element.
Oh, that's a great point.
The employees, the customers, the everyday people whose lives are actually impacted by these decisions.
Yeah, it's easy to get caught up in, the numbers and the strategies. But ultimately, there are real people at the heart of these companies.
Exactly. So here's a question to ponder. What do you think the long-term consequences of ServiceTitan's financial decisions will be for the people involved? Will these strategies create, a more sustainable, equitable company culture?
Right.
Or will they ultimately benefit a select few at the expense of the many?
That is a powerful question. And honestly, it's one that we should be asking not just about ServiceTitan, but about any company making these kinds of decisions
Absolutely.
that, ultimately impact people's lives.
And remember, there are no easy answers. These are complex issues with multiple perspectives to consider.
Right.
But by engaging in thoughtful discussion and remembering that human element, we can hopefully move toward a more responsible and equitable business world.
Beautifully put. And with that in mind, we encourage our listeners to continue exploring this topic and share their own thoughts and insights with us.
We always love hearing from our community and learning from your perspectives.
Yeah, it's a good point. It's not, all about the numbers.
It's not all about spreadsheets.
Right.
There are people involved.
Exactly. So let's circle back to ServiceTitan.
Okay.
And this direct share program,
Yeah.
offering stock to C-suite execs from their customer base. I mean...
That's causing quite a stir.
Yeah, it is. I mean, on one hand, you could say it's like a savvy move, It's a way to strengthen those relationships with their customers.
Yeah, I mean, you could even frame it as, giving those customers a stake in ServiceTitan's success.
Yeah.
It's like, aligning incentives in a way that traditional business models don't always do.
Right, but, and this is a big BUT.
BUT.
Can't ignore the potential for conflicts of interest.
Oh, absolutely. I mean, imagine a scenario where a customer who's also a shareholder is involved in their company's decision about, which software provider to use.
Yeah.
It's easy to see how those personal financial interests could sway that decision, even subconsciously.
Absolutely, yeah. So that raises questions about fairness, transparency. I mean, are all of their customers even aware of this program?
Right.
Are they comfortable with what this could mean?
Yeah. Those are questions that ServiceTitan will need to address if they want to, maintain that trust with their customer base.
Right. Yeah. It's a delicate balance.
Oh, absolutely.
They're walking a tightrope here.
It is a tightrope walk.
What strikes me is how this reflects the changing power dynamics between companies and their customers.
Oh, interesting. Yeah. How so?
Well, I mean, in the past, it was a pretty one-sided relationship.
Yeah.
Companies called the shots, customers had limited options.
Yeah, take it or leave it kind of thing.
Right. But things have changed.
They have.
I mean, with social media, online reviews, just a more informed consumer, the power dynamic is shifting.
Absolutely. Customers have a much louder voice now.
They do.
They can, really make or break a company's reputation.
Right.
Influence their bottom line in ways they never could before.
Yeah, and companies like ServiceTitan are realizing.
They are catching on.
You're figuring out, like, how do we engage with customers? How do we build loyalty?
Right.
How do we even give them a piece of the pie?
Literally.
Yes.
Literally, yeah.
It's a double-edged sword, though.
It is.
On the one hand, you have this increased customer involvement, which could lead to more transparency, more accountability, maybe a more balanced distribution of power.
Right. But then on the other hand, there's that potential for,
Right.
conflict of interest, undue influence,
Yeah.
exploitation even.
It's complex, and it's changing so fast. And that's why I think these conversations are so important. We need to, unpack these issues, look at all the different angles, and equip ourselves to, to deal with this new reality. Well said. And speaking of, new realities, This ServiceTitan IPO,
Yeah.
with all its twists and turns,
Yeah.
this could be a sign of, like, what's to come.
It could be, yeah. I mean, their willingness to just throw the rule book out the window, right?
Yeah.
Challenge those norms, experiment with new financial models. This could be a glimpse into, the future of how companies go public.
It's a bold move. And whether it pays off.
We'll see.
Yeah.
We'll see.
But one thing is certain, they've shaken things up.
They have.
They got people talking.
That's never a bad thing,
No.
especially
no.
in a world that can feel a bit stuck in its ways.
Yeah. Yeah. So to all our listeners out there, keep your eye on ServiceTitan.
Oh, yeah.
Their story's far from over.
Not even close.
And the lessons that we can learn from their experience
right.
could really shape the future of this whole IPO landscape.
Absolutely. Stay curious, stay informed,
Yeah.
and never stop deep diving.
That wraps up our deep dive for today. Thanks for joining us.